It's Friday, December 11th. The year is almost gone. I just read an article this morning that they said trading in 2020 was like it was like a year, but it seemed like a decade. It really did. What a year. Well, let me start off with something here, just to give you some idea of what's going on. If you look at the indices, and folks, I'm going to say this again. I hate to tell you, I told you so, but I've been telling you this for a while. The market has been very shaky, and although we recovered yesterday pretty good, it's down again. There's a lot of fear about this COVID, that COVID is coming back, uncertainty. And the biggest factor, as I said it yesterday morning, it took a little while to permeate throughout the market, but the biggest problem was the jobless claims report. The jobless claims report was awful. Look at this, 853,000. So the indices are down. Let me go through the global markets. I'll show you which indices are leading, which ones are lagging. We'll go through everything, and I'll give you a few more shorts, because that's where the low-hanging fruits are right now. So let's talk about global economy. Today's segment actually encompasses a really good understanding of what I've been talking about all week. So global markets were mostly lower Friday after U.S. unemployment claims, yesterday's, not today's. We don't have jobless claims today, rose in a sign of worsening economic damage from the COVID pandemic while Congress is deadlocked. Investors have been encouraged by progress in developing vaccines, but optimism has been dented by rising infections in the United States and other markets, while prompted renewed curb on businesses. I'm telling you, folks, unless we get the vaccine earlier than expected, which I don't think we will, we're going to be exactly in the same type of environment that we were last March, April, and May. U.S. stocks slipped after the government reported, and this is what I'm talking about, Thursday, 835,000 people applied for unemployment last month. I made a mistake. I said last week, but it was last month. The highest level since September. Think about this right now. October, November, December, 3 months, and we're now going back down. I mean, going back up. Down meaning employment, up meaning unemployment. It's bad. This is very, very bad. We went from like 1.1 million from my best recollection to about 700,000, maybe dipped our toe into 600 and then started going back up. And folks, if people are applying for unemployment, that means people are not working. And if people are not working, that means people are not spending money. And if people are not spending money, that means our economy is not growing. Very simple. That meant the total number of people receiving jobless benefits rose for the first time in 3 months to 5.8 million from 5.5 million. Weekly jobless claims pre-pandemic, this is actually good to see, were 225,000. So 225,000, 835,000, like 3.5 times as much. On Thursday, a proposed $908 billion aid deal all but collapsed after Senate Majority Leader McConnell said Republican senators won't support giving $160 billion to state and local governments. Republicans are pressing for a measure that would shield companies from potential COVID-related lawsuits. That would be interesting to see. The package would extend unemployment benefits that are due to expire December 26th. So we only have about 2 weeks. Without it, more than 9 million people would lose benefits, which would undercut consumer spending, the main engine of the U.S. economy. And speaking of consumer sentiment, I want you guys to know that today at 10 a.m., we're going to have the consumer sentiment report, which is not a huge report, but it reflects on the GDP and on the jobless claim, and it gives us a good understanding of what consumers are thinking. So it is a report that I am going to be paying attention to. Also, European central banks, keep your eye out on global markets. They may be overcoming or outperforming U.S. economy because we are seeing more money move into $600 billion stimulus. Also, keep your eye on global economy, and specifically emerging markets and the Russell 2000 here in America. And crude oil continues to rise, which is great, but we still have a huge amount of glut. We have a lot of supply of crude oil, and that's causing traditional crude oil to kind of and renewable energy to really skyrocket. Now, in terms of the broad market, the Russell 2000 is still the strongest one. If you compare it to the S&P 500, you will see that the S&P is cooling off and is closer to the 50-day moving average. And yes, I do believe the S&P is going to hit the 50-day moving average. I do believe the NASDAQ is going to hit the 50-day moving average. But as far as the Russell, let's see if the Russell is diverging. Divergence is when you have higher, let me just correct this. When you have higher prices and lower momentum levels. We're seeing that on the NASDAQ, and we're seeing that on the SPY. But you know what? See that? Higher prices, higher peaks, lower peaks on momentum levels. That's dangerous. Let's see if we see it on the Russell. I haven't actually checked. So the Russell, no, we don't. You see that? Look at that. Sorry. Let me show you what I'm talking about. Oh, why do I keep doing this? Look at that. Higher highs, right? Right? But here, we're not really going lower either, right? See that? Whoops. Not really lower, about even or maybe a little higher and higher. Whereas if you look at the S&P, you will see that it's moving higher here, but lower here. And the same thing for the NASDAQ. Now, let me look at emerging markets. Nope. Higher highs, no real divergence. I mean, you know, maybe a bit, but I don't even see it. Let's see. This is what trend lines are good for. No, we're going higher here, and we're going higher here. So I like the fact that we're not seeing divergence on the Russell and emerging markets. One is emerging, which is global markets, you know, China, South Pacific, and so forth. Remember, whenever you have a Democratic president, you see more money going out to the global economy, and Republicans, they like to keep money in the U.S. And ever since the first debate that Biden had, the Russell started outperforming. It doesn't have divergence. And now I'm looking at the emerging markets, and here's another one. This is also an emerging market fund, and it probably looks exactly the same. Yep, no divergence. See, the peaks here are not getting lower. They're about equal, maybe a little higher and higher here. So I like emerging markets, and I like the Russell 2000. And the two ticker symbols for emerging markets are here, EEM, just so you have something to work with, and IWM. That's the Russell 2000. Another emerging market, so don't get confused. This is the Russell 2000. It's a U.S. small cap index, and then you have VWM. I think, no, I got it wrong. I had it a second ago. EEM for sure, and then I think there's another one, VWO. So VWO is an emerging market, EEM is an emerging market, and IWM is the Russell 2000. And again, these are three indexes. One is a U.S. index, and two are global indexes that are not diverging. But honestly, I would try to stay away from the NASDAQ 100 and the S&P 500 till we at least correct to the 50-day moving average. Everything is pointing into that direction. Now, with that said, I'm going to give you two stocks that are larger stocks that are breaking down right now. One is Oli Bargains. It's breaking down. I mean, look at this stock. It's below the 200-day moving average. It peaked all the way back in the summer, so it did not make higher highs. It's been making lower highs, and it's below the 200-day moving average, and I would sell this sucker at about the 76 level. And I think price action can go all the way down right here to 27. So it's at 77, and we want to see it go down to $30, $27 area, Oli. And what does Oli do? Let's take a look. It's in the Russell 1000, not that's a large cap. It's not a small. This is not a small stock. If it was, it would be in the Russell 2000, but it's not. It's in the Russell 1000, which is large. And what did they do? It's a retail closeout, excessive inventory, salvage merchandise, houseware, foods, books, stationery, bed, bath. I don't know. People are not going out retailing right now, and the numbers on the stock are really good. But again, I'm not sure that with the COVID spiking, I don't think the retail world, even on closeouts, is going to be very, very, very important, because I think this company sells things that they're a little more under consumer staples, but again, they're a retailer. Retailers right now are just not doing that great. And if most people who are going to retail stores are going to Costco, Walmart, Target, they're not going to Ollie's Bargains, all right? Ollie's Bargains is not the place to go right now, in my opinion, of course. And again, it broke the 200-day moving average. It looks like it's breaking down. And if this thing goes along with the market, this doesn't have a lot of relative strength. And it made all-time highs in the summer. in the summer. Okay, so this stock has been lagging for quite some time. The next stock is Hormel Foods. And yeah, this stock was really good during the stay-at-home environment. But again, it doesn't look at when it made an all-time high. August, not even November, when the S&P rallied. So it's making lower highs, and it broke the 200-day moving average, the 50-day moving average, and it looks like it's going down. And if you look at the stock, it bottomed out around 39. It's at 46. This stock can really go. I would put a sell stop right around the 46 level, and I would cover it right here above this trading range. As far as Ollie, probably sell it around the 76, 77 level and cover it right around the 50-day moving average. These stocks, in my opinion, have a lot of downside to go if the large caps do what I believe they will do, and that's give out a little more gains and hit the 50-day moving average. Momentum levels are at 11-year high. Put to call ratio was extremely bullish. The greed factor was strong. We're having divergence in the main indices, and basically everything is pointing to a mild correction. Now, I got something important for you. How would you like to never, ever stress about the stock market through the normal trading week ever again? Wouldn't that be nice? Does it sound too good to be true? I mean, it kind of does, right? Well, wrong. Live Trade Profit, head trader, Josh Martinez, and I have discovered that the single most important price indicator is triggered every Friday night after the market closes. It doesn't mean you have to trade through the weekend. It doesn't have to mean you have to watch the market through the weekend. It just means we get an indication of what the market's going to do, or the stock is going to do next week on Friday. So we get plenty of heads notice, plenty of heads up. The indicator acts like a stock market barometer, which is what I really love about it, pinpointing with up to 90% accuracy which stocks could explode higher over the next 5 trading sessions. That simple. 90% accuracy, potentially 90% accuracy, to see which stocks could explode higher over the next 5 trading sessions. No matter what happened in the market leading up to Friday's close. Did you guys hear what I just said? It works no matter what happened during the week. All we care about is what happens on a specific stock, index, whatnot, Friday at 4:01 p.m. Eastern Time. Then we get our entry and exit and profit target from that signal, and we give it to you for next week. This is really smart. It makes sense. It's low risk. It's got a good profit to risk ratio, and I love it. Click on the link below to learn about the secret trading phenomena and how you could earn thousands of dollars in extra income week after week. Hey, there's no guarantees in the market, but I'm telling you, Josh and I are onto something. 90% up to 90% accuracy. Which stocks explode higher over the next 5 days? Don't miss out. Check it out. This may help you gain some low-hanging fruits in this market environment, which we're in right now. Have a great weekend. Post some comments, post some feedback, and let me know what you're thinking. And I hope I'm helping you out. I really do. Have a great weekend,